what are the sources of money for a business? And depending on the stage that your business is at, so it's either a new business, it's an operating business, it's an operating business that maybe had some financial turbulence and now has been able to get things back on track, or you're buying a business, or you're buying out a shareholder. I mean, there's so many different moments of time that your business can be in, which changes the type of money that your business would be able to access. But here's generally how it works. When you're starting a business, you typically will use your savings and or your credit cards or any other personal resources that you have. You know, if you're building a piece of software, for example, you might choose to do the programming yourself. If you're looking to start a little retail store, then you might end up getting a couple of extra credit cards to try and help finance some of the early costs that you're going to have. But once you've exhausted your savings and your credit cards and your personal resources, you tend to move into what's called family and friend money. So now you call up, your rich aunt or uncle, and you say, I've got a business, and this is kind of where I'm at with it, and so now I need some more cash to put in. And hopefully they're happy to do that for you. But once you move past family and friends, usually you've proven the idea by then, or not. But generally speaking, once you've used your credit cards, your personal savings, any of the other resources that you might have, plus your family and friends' money, generally speaking, you've been able to prove that you have a business. And if you do, then kind of the next series of steps are generally, angel investors. So these would be investors that invest in new businesses that have some measure of traction to them, or venture capitalists if you're a little further down the road. There's also kind of a new category that has come up in recent years, which is crowdfunding, and you can refer to some of our other Emily Now episodes to learn about what that is. Those basically are online portals where you raise money from a crowd of people. So if you're looking for, say, $100,000 for your business, you'd go onto a crowdfunding website, post your opportunity, and then people could put in $1,000 or $2,000 or somehow participate in raising the money for you. Once you've gotten over that amount of capital and your business has now progressed to that level, then you start looking at banks, or you start looking at investment funds, or you now start looking at maybe borrowing money as opposed to just asking people to put it in and giving up maybe some of the profit. But the key is always to know how much you need, what you need it for, and how you're going to pay for it. In addition to having a business plan and financial projections, you definitely should know how you're going to make money and how the business is going to pay for itself, because all of those answers and all of those things help you understand what kind of money you need. What the advice I've generally given to businesses, because we work with mlenow.ca, our focus client is anyone looking for $10 million or less. So that tends to be small businesses. It tends to be people who are maybe refinancing their house to take the money to invest in a business. But generally what I say is, if you don't know how you're going to make money and you haven't proven out the revenue yet, and you don't really know who your customers are, and there's just a bunch of unknown, then you're going to want to raise equity as opposed to debt. And I'll speak to that in just a moment. There's two types of money in the marketplace. There's money that you have to repay and make monthly payments on, and you're on the hook for it. That's called debt. There's other money that is exactly the opposite of that, where someone will give you the money, you don't have to make payments on it, but in exchange for that privilege, they're going to want a piece of the profit or a piece of ownership. So equity, debt, equity. The advice I've given people, and businesses in particular, is if you don't know many of the important things about your business yet, you don't know your profit margin, you don't know your customer, you don't have kind of enough traction to really figure out with any certainty what life's going to look like, then that's when you would take equity. You would take equity because you're prepared to give up some ownership for the risk of the unknown and not have to make regular payments with an interest rate and use up all of your cash flow. However, if you do know some of these things, you do know who your customer is, you are proving out revenue, you have some results that show you with a certain amount of certainty that, yep, I think this is what our business is going to look like, then debt might be an option, because in exchange for debt, you don't have to give up any ownership. You can keep all of the profit. So the idea is that if your profit's going to be greater than the cost of borrowing the money in the form of interest, then you might want to take on debt. But that would only be in the case where you do have some measurable handle on what the result is going to be. Because there's no point taking on a big loan and having a creditor breathing down your neck if you don't really know how you're going to pay them back or what the mechanism is going to be for paying them back. So those are kind of the options for how a business is going to end up finding sources of money. It's going to start with your personal savings and credit cards, and it's going to move into family and friends and rich uncles and aunts maybe. Then you're going to move into maybe crowdfunding or angel investing or venture capitalists, and then at that point you probably are going to start looking at maybe some sort of debt financing or subordinated debt, or trying to get a bank involved. So lots of options out there. We would encourage you to visit mlenow.ca to kind of get a handle on what debt would look like. If you punch in the amount of money you think you need, you're going to see the payments and the amount of equity that's going to have to be in your business. And if you don't have that, you're going to have a plan that sort of shows that. So mlenow is a great resource for you to take advantage of if you're looking for money for your business. And there's lots of other options out on the internet to learn about it. It's a pretty well-covered topic out there in the internet world, in the internet land. Lots of blogs, lots of videos, and so take advantage of those free resources if your business needs money.